Hello, folks. Welcome to another weekly edition of the Satori Traders Precious Metals News. We have two items on the cover this week. Eskay Mining, they are mining in the Golden Triangle up in British Columbia. That is elephant country, and it appears that Eskay has one elephant already in the bag on their SIB project, their first drill program of 20 holes. Out of those 20 holes, 18 showed high-grade gold mineralization. And then this past week, they had a news release about BLEG surveys. BLEG surveys, you go out and you collect stream sediments from areas on your property where you think you might have gold, and then you analyze those sediments using the BLEG method, and it shows you what's in those stream sediments. What Eskay found is that they have additional VMS targets on the property. If you ask what's going on in the investment world, it's all about interest rates. And so one of the things we have to keep in mind is that when interest rates rise, all investment classes get repriced, and we certainly started to see that at the end of last week. There was a U.S. Treasury auction on Thursday. It was for $62 billion worth of 7-year notes, and that auction did not go well. There was not a lot of demand for those notes. And so in response or in reaction, investors started repricing markets on Thursday and Friday. Equities were taken lower, commodities, precious metals, etc. So here's Eskay in the daily time frame. Chart looks good from a technical perspective. This increase in volume on Friday's sell-off is a little bit concerning, but on the other hand, this action Friday, that was a 2% decline in Eskay. And if we go look at GDXJ, so this is my proxy for the mining stocks, on Friday, GDXJ dropped 3.5%. So 2% versus 3.5% suggests that Eskay is a little bit stronger than the overall mining stock sector. But again, rising volume on a sell-off is always a little bit concerning. This is the news release that Eskay gave us last week, and you can see this is BLEG. It's Bulk Leach Extractable Gold. BLEG survey. Take stream sediments and see what's in them. Chart of gold, well, clearly on Thursday we started to get the sell-off, and then on Friday it continued. Clearly gold broke below its support level there at 1770 or so. Next support comes in here at this median line extension of the Schiff pitchfork, and that's at basically it's 1700, which of course is also a round number. So next support 1700, and then we've got the bottom of this downward sloping price channel, and that's 1675 or so. MACD clearly in bear mode, and we got a new sell signal last week. So not a pretty chart if you're a gold fan. Silver remains strong. So in light of everything that's going on, multiple attacks, paper sellers of silver, silver still remains strong, well above its 200-day moving average. Friday's action, while not pretty, it took price down to the 50-day moving average, and we got a nice strong bounce there. So, not bad action out of silver, and certainly far more bullish than gold. And so this is kind of cute. On Friday, someone started a GoFundMe campaign. What they want to do is rent billboard space to promote the Silver Squeeze campaign. So this campaign started on Friday. The objective was to raise $50,000. Between Friday and 10 a.m. on Sunday morning, they raised $50,000 to hire billboard space to promote their Silver Squeeze campaign. And of course, the idea behind the campaign is that physical silver, buying physical silver, is Wall Street's Achilles heel. And that by taking possession of physical silver, the little guy, the little investor, will finally give back to Wall Street what he and she has been getting for decades. And so that's just an interesting phenomenon going on in the silver market. Mining stocks, nothing bullish here, so all we can do is talk about the next level of support, and that's down, what is that, 42. We come into our next horizontal support zone, potential support zone, and then we've got the median line extension of this modified shift pitchfork. And of course, we've got the bottom of this price channel as well. Notice the rising volume as this sell-off occurs. So here's GDXJ in the daily. So again, holding on by a thread Thursday, clearly decisively dropped below support on Friday. Big volume. We're in bear mode on MACD. Just not a pretty chart. And again, all we can do is talk about next level of support. SIL looks better than GDXJ, and of course that reflecting the underlying strength in silver, a price sitting right on top of a potential support level. The upper boundary of this downward sloping price channel has also demonstrated that it is a support level, so we could get support there as well. Let's move on to the dollar. It is trying to rally. On Thursday, we got this doji candlestick, which is suggestive of bottoming. That's a bullish candlestick. And then on Friday, we got a follow through. We got a gap on the open and then a strong push up into this resistance zone. So we'll see what the dollar is able to do for us this time. And notice that MACD may be close to not only issuing a buy signal, but moving fully into bull mode where both indicator lines are above the zero level. And that would suggest that the primary trend is upwards. In TNX, in my opinion, this is the big story happening right now in the markets. It's the rising interest rates. We had identified this 1.5% target just a few weeks ago, really wasn't that long ago. And here we are, it's already been hit and overshot, and now we'll have to see what happens next. Still nothing in this chart to indicate that this move is over. MACD full in bull mode. Been on a buy signal since way back here, lots of energy, and again, weekly time frame, that's the big trend. In the daily chart, we can see that interest rates are rising with high energy. We've got runaway gaps, runaway gap. This is impulsive price movement where price moves relentlessly higher without pullback. And so combination of gapping higher, impulsive movement, and then of course on Thursday, that was an extremely impulsive movement. Interest rates are trying to rise. Investors, bond investors, are trying to take interest rates higher. And of course that sets up an interesting dynamic because not only can the economy not handle higher interest rates make it very challenging for the Fed and the Treasury to continue the status quo. So higher interest rates, that's the story of the day in my opinion. Let's look at another chart, which is also interest rates. So I was sitting here watching charts Thursday and wasn't watching interest rates specifically, but noticed out of the corner of my eye, this had happened. And so this was the reaction of bond investors to the 7-year auction. They dumped bonds and they did it quick. This movement happened in less than 3 minutes. What we see is that investors dumped bonds, and so the int rate rose dramatically. And then some unknown buyer stepped into the market and started buying bonds, 10-year notes in this particular chart, took rates back down. And so that was very interesting action on Thursday. This is an 8% move. In less than 3 minutes, bond investors took interest rates 8% higher, and then again, some unknown buyer stepped in and took rates back down. Part of the reason that interest rates are so key right now to the big picture is because investors and financial analysts are expecting the Fed to implement yield curve control. And yield curve control would look like, or would be implemented by, the Fed stepping into the bond markets and buying up everything that was offered over a set interest rate. What it would look like in a chart is pretty much like this, that whenever interest rates stepped above the approved boundary, the Fed would step into the market as a buyer and take rates back below the approved boundary. And so that's what investors and market pundits are expecting, that the Fed is about to implement yield curve control. Now, in the game theory, or from a strategic point of view, when everybody knows what the other guy is going to do, and the other guy knows that everybody knows what the other guy is going to do, it's quite likely that something else entirely different is going to happen. And so that's what I'm pondering these days is, what is the Fed and the Treasury going to do different? Because it's obvious that they've boxed themselves into a corner where their only option is to print U.S. dollars and buy U.S. government debt. We'll see how that plays out. Let's continue. So in the equity markets, this is the S&P 500. Again, bloody on Thursday and Friday, but it took price down to potential support level at the 50-day moving average. The bottom of this, we've been watching this mini channel. This is a wider price channel, and potentially on Friday, we reached the bottom of that channel and got a little bounce. So you can see the tail on that candle from Friday. That shows that price reached the potential support level and bounced, and then the close was there. So closed right on the 50-day moving average. We've got additional potential support, the extension, the median line extension of this modified shift pitchfork. The only thing bullish about this chart is that price is sitting on a potential confluence of support. So if some bullish catalyst happened this evening or tomorrow morning, that would be a good place to rally from. In the Dow, we got the same drop through support down to the 50-day moving average. What I notice is that price didn't bounce. And so that's a very bearish candlestick where price closes essentially on its low. Nasdaq, it got beaten. It got taken to the woodshed on Thursday with that big drop below support. And then on Friday, buyers and sellers did battle, and kind of indecisive, but the buyers did prevail. They were able to take price a little bit higher on the day. I'm going to call that a non-committal candlestick. Not sure what to expect from Nasdaq on Monday. And again, it will depend in large part on what kind of catalyst, if any, we get tonight or tomorrow morning. So Brent, this is another market that has been rising relentlessly. We don't have the runaway gaps, but certainly have impulsive movement where price just moving relentlessly higher with just little or no pullback. Notice that on Tuesday and Wednesday, price in this market had reached obvious resistance at the top of this price channel and at this median line extension. However many we are at, that must be 5 at this point, had reached resistance at that level, and then the bearish catalyst with interest rates on Thursday, and the market dropped off pretty dramatically. So that's all I got this week, folks. And I hope that you have a fantastic week in the week ahead, and I look forward to speaking with you again.